Welcome back to Chairman's Briefing. Here we cover the latest mining headlines. I'm Rachel Lee. Now, if you follow the daily trading action of precious metals, you would have noticed gold's recent show of strength. Ryan McIntyre, managing partner at Sprott, thinks gold could really take off, but there's a catch. He's looking for more risk aversion from investors before we see a significant rally in gold. Even though the Fed is expected to cut rates in September, lowering opportunity costs for holding gold, institutional investors are waiting for clearer signs of economic trouble before they dive in. Sure, it's the U.S. economy that grew 2.8% last quarter, but McIntyre is pointing out some red flags: sky-high valuations in U.S. stocks and a record-breaking $35 trillion U.S. dollar deficit. He believes that these issues, especially the risk of a weaker U.S. dollar, will push more people towards gold as a safe bet. To quote McIntyre, "I expect that gold will remain the biggest competition against the U.S. dollar as nations continue to diversify their holdings." Next, silver's been having a tough time lately, caught up in the overall weakness of the base metals market. A lot of this is tied to economic slowdowns in China and Europe. Now, while there are some hints that Europe might be starting to stabilize, silver still isn't rallying alongside gold. According to Rana O'Connell, head of market analysis at StoneX Bullion, one big factor is China's solar market, which has been a huge driver of silver demand. Last year, solar energy made up 20% of global silver fabrication demand. However, with talks of overcapacity in that market, it's putting pressure on silver prices. Next, on copper. Money managers have pulled out over $20 billion in bullish bets on copper since mid-May. This shift comes as concerns about weak demand from China have shaken up investor confidence. Even though copper is crucial for data centers, renewables, and electric vehicles, the recent slump has raised questions about whether the sell-off is over. Despite this short-term weak demand and market surplus, copper's long-term fundamentals remain intact. Trading convictions remain high as there's growing belief that smelters will soon be forced to cut output following a collapse in processing fees. For now, copper is trading at around $8,900 a ton, nearing its lowest close since March. The big question is whether this dip will continue or if the market will stabilize and wait for new developments. Next, majors are thinking medium to long term with copper, and their appetite is insatiable. Here, as you look at Filo Mining's 4-year weekly, this is the kind of price trajectory that we're looking for in junior exploration. In a previous briefing, we reported that Filo had a target on its back, that it was being circled by two resource-hungry predators who are anxious to bulk up their copper exposure. BHP and Lundin Mining made national headlines on July 29th with its announcement that it'll form a 50-50 joint venture to acquire Filo's Filo del Sol project for 4.5 billion Canadian dollars. This price tag ranks as one of the biggest M&A events to cross our screens. The thing is, these two mining giants also own the nearby Josemaria copper-gold-silver project. Consolidating the two assets, the Filo del Sol and Josemaria projects, to form a bigger and potentially more efficient operation is a cost-cutting strategy that's now in vogue across the sector. Mining.com's Cecilia Jasmami eloquently captured the prevailing sentiment among the bigs in their pursuit of Tier 1 assets when she said, quote, "The price that BHP and Lundin are willing to pay for undeveloped mines, which will require significant investment and years to become operational, show the importance that mining companies place on securing copper assets." After more than a month of silence, Victoria Gold CEO John McConnell spoke publicly for the first time in an interview with Canadian broadcaster CBC. McConnell acknowledged that there's still a lot of work to be done to contain the heap leach failure at the Eagle mine, but reassured that Victoria Gold is committed to staying on site. McConnell believes that major environmental risks have been managed and that there is no longer a significant threat. The focus is now on treating the water, and experts have been brought in to figure out what caused the failure. However, concerns have been raised by the First Nation Nacho Naik Dun and government reports about the company's containment efforts. In response, the Yukon government is hiring its own contractors to build a berm where the failure occurred and have noted increased cyanide levels in the water. CEO McConnell also told CBC that Victoria Gold is sound financially for the time being, for at least 4 to 6 months, but that a significant raise will be necessary to square debt payments of 230 million Canadian dollars, which is due March 31st, 2025. Earth Labs, ticker symbol SPOT on the Venture Exchange, released its latest innovation, a new online mapping interface. Subsidiaries DigiGeoData and the Northern Miner take old paper maps used in mineral exploration and bring them into the digital age. This means that you'll get all the details you need for exploration in a fresh and easy-to-use format. The best part is that it's free to access and available to all users. You can find comprehensive data on over 17,000 assets and properties worldwide. You can visit maps.northernminer.com or go to the Northern Miner website by selecting the TNM Maps tab. The union at BHP's Escondida mine in Chile, the world's largest copper mine, has urged its 2,400 members to reject a final contract offer and prepare for a potential strike. If rejected, a strike could begin immediately, though Chilean law allows for up to 10 days of government mediation. Union President Patricio Tapia highlighted that a strike would stop copper production as the union represents nearly all frontline workers. The union is asking for a contract that includes 1% of shareholder dividends, citing BHP's significant profits. It's important to note that they're better prepared for a strike than in 2017, with a larger strike fund and financial support for workers. Chinese engineers and the Taliban officially kicked off a massive copper mining project at Mez Aynek in Afghanistan, which is home to the world's second largest copper deposit. The $3 billion deal, originally signed in 2008, faced delays due to conflict, but is now advancing under Taliban control. The project could take 2 years to start copper extraction. The Taliban, struggling under sanctions and isolation, views this as a crucial economic boost, while China, eager to exploit Afghanistan's mineral wealth, sees this as a step towards strengthening ties with Kabul amid ongoing security concerns. Record-high gold prices have sparked significant activity in the Australian bullion sector. Horizon Minerals, ticker symbol HRZ on the Australian Stock Exchange, is the country's newest gold producers, going ahead with development of their Burara gold mine in Western Australia, located only 10 kilometers east of the state's biggest gold mine. Next, Kiribati, a small Pacific island nation, is at the center of a heated election for the International Seabed Authority leadership, which governs deep-sea mining. Brazilian scientist Letícia Carvalho claims that Kiribati's ambassador tried to bribe her to withdraw, a claim that the ambassador denies. Incumbent Michael Lodge is pushing to finalize mining regulations quickly, while Carvalho advocates for more environmental protections. This election will determine how soon companies can mine the ocean floor for critical metals and balance these activities with conservation efforts. The outcome will significantly influence the future of deep-sea mining and ocean preservation. And we'll wrap it up here for this week. You can read the chairman's briefing every Thursday morning. The link to subscribe to this newsletter is below. But of course, if you'd rather hear it from me, make sure to subscribe and hit the notification bell here. Thanks for watching, and we'll see you next week.